Dear learners, welcome all. In this video, we are going to see the journal. In accounting process, journal is the primary books of accounts. It is the first step of accounting process. In this, we record all the business transactions. For understanding journal, you should understand the types of accounts and their rules. There are three types of accounts: personal account, real account and nominal account. The rules of personal account are debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. Now we will see the format for journal entry. This is a specimen journal entry. Date column. There the first one is for writing year and month, and the small column is for writing date. Then the particular column, there we are going to write the name of the accounts. This is for ledger folio. It's called a debit column, and this is called a credit column. Here the account which is to be debited should be written here, and here you should write as DR. Then the next line, you have to write the name of the account which is to be credited, and in appropriate places the amount should be written, and narration should be written about the transaction for which we have made a journal entry. This is example problem for journal entry. This is a very basic problem. This problem is especially for understanding the rules of accounting. I have given 6 transactions for 6 rules of accounting. Here if you see the problem, on January 1 the first transaction was paid cash to Raman. On date 2 received cash from Shiva, and 3 we bought machinery for rupees 80,000, and on 4 we sold old furniture for rupees 5,000. On 5th we paid salaries. On 6th we received commission. We will take the first transaction. We paid cash to Raman, 25,000. While we are recording transactions in journal, you should understand a basic concept in accountancy, that the ownership and the business are separated. We are doing accountancy for the business, not for the owner. So now we should imagine that we are doing accountancy for business. The first transaction is we have paid cash to Raman rupees 25,000. There the Raman is there. Raman is a person, so Raman account is a personal account. Here we paid cash to Raman, and Raman receives cash, so he is the receiver here. So according to the rules, we should debit the receiver. So here we have debited Raman's account, and we paid cash. The cash is an asset. In this transaction we have paid cash to Raman, and the cash goes out from the business. So according to the rules of real account, we should credit what goes out. Here cash goes out, so we should credit cash account. So this is narration. Transaction 2, we have received cash from Shiva rupees 25,000. Here the 2 accounts are coming. One is cash account, another one is Shiva account. The cash account is asset account, and the Shiva account is personal account. Here according to the rules of real account, debit what comes in. Here we receive cash, so cash comes in, so we have debited a cash account. And Shiva is a personal account. Here we receive cash from Shiva. Shiva gives cash to us, so he is a giver. So according to the rule, credit the giver. So we have credited Shiva account, and narration is given. We will take the third transaction. Here we have bought machinery for rupees 80,000. Here 2 accounts are coming. One is machinery account, another one is we have bought machinery and for as consideration we have paid by cash. So two accounts, one is machinery account, another one is cash account. According to real account rules, debit what comes in and credit what goes out. Here machinery comes in because we have bought, so we have debited machinery account and we have paid cash for that. So cash goes out from here, so cash goes out, so cash account is credited according to the rule. Then transaction 4, we have sold old furnitures for rupees 25,000. Two accounts are coming, one is furniture account, another one is cash account, because we have sold furniture and we have received cash. So cash account and furniture accounts are coming. According to the rules of real account, debit what comes in, cash comes in here because we have sold furniture and the cash comes in, so we have debited cash account. Here we sold furniture, so furniture goes out, so according to the rule, furniture account is credited. Then transaction 5, we have paid salaries rupees 24,000. We have paid salaries to our staff members. This is expenditure for us. According to rules of nominal account, debit all expenses and losses, credit all incomes and gains. So here salaries are expenses, so we have debited salaries account. We have paid salaries as cash, so cash goes out here, so cash account is credited. The narration is given. Then we will take a transaction number 6. We have received a commission rupees 3,000. Here commission is an income, so it comes under nominal account. Here two accounts are involved, one is commission account and another one is cash account. Here we receive cash, so cash account is debited according to the rule. Then commission is an income, so according to the rules of nominal account, credit all incomes and gains. Here the income name is commission, so we have credited a commission account. This is a small description about the transaction. So I hope the learners have understood the basics of journal. Thank you, dear learners. We will meet in the next video.